A very good evening to all the participants of this webinar. And I'm Arvind Mishra, Deputy Director at DTRTI Lucknow, welcoming you to this topic, Bill of Exchange and Promissory Notes, Part 4 of the series on bookkeeping and accountancy in our DTRTI Lucknow webinars 2021. So we begin with illustration 7 of this topic of bill of exchange and promissory notes. Now, Rita has owed 1 lakh rupees to Siriman. So on 1st October 2016, since Rita is owing 1 lakh rupees to Siriman, she has to pay 1 lakh rupees to Siriman. So Rita accepted a bill which is drawn by Siriman. So the bill is prepared by Siriman, sent to Rita for acceptance, and Rita has accepted the bill. And the bill is for the amount means for rupees 1 lakh at 3 months, means it is payable after 3 months. Siriman got the bill discounted with his bank. So Rita has accepted the bill and sent back to Siriman after accepting it, and Siriman has got the bill discounted with his bank for rupees 99,000, which means that the 1,000 are the bank charges, and this discounting has been done on 3rd of October. Now, before the due date, Rita has approached Siriman for renewal of the bill. Because she is not in a position to pay, so she approaches Siriman for renewal of the bill. Siriman has agreed on the condition that 50,000 rupees would be paid immediately, along with the interest on the remaining amount at 12% per annum for 3 months. And for the balance, Rita should accept a new bill at 3 months. So what is happening here is that Siriman has agreed on the condition that out of the 1 lakh rupees, Rita should pay half of it, 50,000, immediately, along with the interest on the remaining amount, that is at 12% per annum for 3 months. And for the balance, that is balance 50,000 rupees, Rita should accept a new bill at 3 months, which means that that new bill would be for 50,000 rupees and it will be payable after 3 months. These arrangements were carried out, but afterwards Rita has become insolvent, and 40% of the amount could be recovered from Rita's estate because Rita became insolvent. So we have to pass the journal entries with narration in the books of Siriman. So we have to remember that these are the books of Siriman, and all the entries have to be made in the books of Siriman. So here, the first entry that is being made here is that the bill is accepted by Rita for rupees 1,000, and therefore Siriman would be debiting the bill receivable account on receiving the acceptance of Rita, and he'll be crediting Rita with it because Rita has accepted the bill, and therefore Rita has been credited with 1 lakh rupees, and bill receivable account has been debited in the books of Siriman for 1 lakh rupees. Then thereafter, Siriman goes and discounts this bill with the bank, and therefore he receives 99,000 rupees from the bank. So bank account is debited by 99,000 and discount account is debited by 1,000 rupees. So the 1 lakh rupees being divided into bank and discount accounts, and bill receivable account is now written off, or it is now squared off, because earlier we had debited bill receivable by 1 lakh rupees and now we are crediting bill receivable by 1 lakh rupees. Now next step is that Rita is unable to pay this amount and she has requested for a renewal of the bill. So when Rita is requesting for the renewal of the bill, what we are doing here is we are cancelling the older bill, and therefore when we are cancelling the older bill, we are again debiting Rita with rupees 1 lakh rupees, and the bank account is being credited with 1 lakh rupees because the older bill has been cancelled because Rita is unable to pay. So in fact, we had earlier squared off this bill receivable account and we had got the amount from the bank, but here our bank will again collect the amount from us. So therefore the bank account has been credited with 1 lakh rupees. Now, because the bank was supposed to receive this 1 lakh rupees from Rita, but Rita will not pay this amount and she has requested for a cancellation, and therefore the discounting has failed, and therefore, since we have received the amount from bank, once again the bank account will be credited because the bank will take away this 1 lakh rupees by debiting our bank account. Now thereafter the next entry relates to the payment of the interest on rupees 50,000. So Rita will be debited with 1,500 and interest account will be credited with 1,500 because 1,500 is the amount of interest for the period of 3 months at the rate of 12% on 50,000 rupees. Because the deal is that out of the 1 lakh rupees that Rita has to pay, and Rita has requested a renewal of the bill, but Rita has been told that you pay 50,000 immediately upfront, and apart from that 50,000 you pay the interest on the remaining 50,000. Then only we will renew the bill and make a new bill, a fresh bill for 50,000 rupees. So here therefore Rita's account is debited by 1,500 and interest account is credited for 1,500. Thereafter Rita makes the payment and therefore we credit Rita with 51,500, which includes 50,000 of the amount and to be paid and 1,500 of the interest. So 51,500 with which Rita has made the payment, and that has been debited to our bank account to the extent of 51,500. Now thereafter a new bill is drawn and sent to Rita, and Rita accepts this new bill for rupees 50,000. So bill receivable account debit 50,000 and Rita is credited with 50,000 when she accepts this new bill for 50,000 rupees. But however, though Rita has accepted this bill, she fails to make the payment and therefore the bill is ultimately dishonored. And therefore when the bill is dishonored, then Rita will be debited and the bill receivable account that was debited earlier will be credited. So this is the reverse entry of the drawing of the bill. Finally, Rita has failed to make the payment, and Rita is now having a debit of 50,000 rupees in her account. But however, out of the 50,000 rupees, 20,000 rupees is recovered to the extent of 40% of the amount due. So 20% is the for 20,000 is 40% of 50,000, and therefore that is recovered, and therefore that money has come into the bank account. So bank account has been debited by 20,000, and the remaining amount of 30,000 could not be recovered, and hence we are debiting the bad debt account with this 30,000 rupees and crediting Rita's account with 50,000 rupees. So when we credit Rita's account with 50,000 rupees, now we have nothing more to receive from Rita, because we have written off 30,000 rupees as bad debt, and we have received the payment of 20,000 rupees in our bank account from Rita's receiver, or whomsoever is responsible for distributing the proceeds after insolvency. Now we come to accommodation bills, and let us see what accommodation bills are. Now we have seen that bills of exchange are usually drawn to facilitate the trade, to make the trade easy. That is, those bills are meant to finance the purchases and the sale of goods. But the same mechanism of the bill can also be utilized to raise the loan or to raise the finance, not just for purchase or sale of goods, but generally to raise loans. Now let us understand this with the help of an example. Now suppose that boss needs finance for 3 months. So boss can persuade his friend Kapoor to accept his bill or accept the draft of his bill, because he needs finance for 3 months, and though there is no transaction with Kapoor, he will say to Kapoor, Kapoor, please accept this draft of the bill. And once the Kapoor accepts the draft, then the bill of exchange will be taken by boss to his bank, and he will get it discounted. Because there is a deal between boss and Kapoor. Boss says, I will draw the bill, and he tells Kapoor to accept the bill. He draws a bill even without a backing transaction or a background transaction. He draws the bill and he sends it to Kapoor, and Kapoor accepts the bill, because there is a deal between boss and Kapoor that please accept this bill. And once the bill is accepted by Kapoor, boss takes the bill and gets it discounted in the bank, and therefore boss will be able to make use of the funds which he will receive from the bank on discounting of the bill. Now when 3 months period expires, bank will go to Kapoor to collect the payment. So what boss will do is that he will send the requisite amount to Kapoor, and Kapoor will make the payment to the bank. Kapoor will meet the bill. Thus boss is able to raise money for his use from the bank. So in this case, he is not requesting the bank with anything. He is simply discounting his bill with the bank. If both boss and Kapoor need money, if both of them need money, they can use the same device, because after taking the money from the bank, they can divide the money among themselves. So either boss will accept a bill of exchange that will be made by Kapoor, or Kapoor will accept a bill of exchange that will be drawn by boss. In both the cases, in either of the cases, they will take the bill and discount it with the bank, and whatever proceeds they get from the bank, they will divide it between themselves according to their own mutual agreement. Now, the discounting charges that bank will charge will be also borne by the two parties, and they will bear the discounting charges in the same ratio in which the proceeds have been divided. So on the due date, what happens is that the acceptor of the bill will receive from the other party his share, and the bill will then be met by both of them together. When bills are used for such a purpose, they are known as accommodation bills, because there is no backing of any purchase or sale transaction here, and therefore without any purchase or sale transaction, these bills are used for generating the money or generating loans from the bank. So therefore, these bills are known as accommodation bills because they are meant to accommodate the two parties for their loan purpose. However, it may so happen that drawer is not able to remit the proceeds to drawee on the due date, because we have to look at all the practical situations. Now let's say the drawer of the bill was supposed to remit the proceeds to drawee on the due date so that he can meet the bill. In such a case, if he is not able to remit the proceeds, the drawee may draw a bill on the drawer, and the drawer will sign that bill, and drawee will get it discounted with the bank, and having discounted with the bank, he gets the money from the bank, and he uses that money to honor the first bill. Now, if the new drawer, who is actually the drawee of the first bill, also remits some proceeds of the new bill to the new drawee, who is actually the drawer of the first bill, then the proportion of the discount to be borne by the new drawee, and how much proportion of the discount, the bill discount, will be borne by the new drawee, will be based upon the proceeds remitted as well as the benefit obtained by him on the basis of the first bill, that is, by not paying the amount due to the original drawee on the due date. So this is a situation where drawer is not able to remit the proceeds, because if the drawer would have remitted the proceeds, the drawee would have used those proceeds to meet the bill. But drawee is not getting the proceeds from the drawer because the drawer does not have the proceeds. So what the drawee will do, he will make a bill and he will give it to the drawer. Drawer will accept the bill, and that new bill the drawee will take to the bank, and he will discount that bill from that bank. And when that discounted, after discounting, he will receive, drawee will receive the proceeds. He will use those proceeds to meet the earlier bill, and based on the profits or advantages that both of the drawer and the drawee have received, they will divide the discount which is to be borne, which is to be paid to the bank, because there are two bills which have been discounted here. So the proportion of the discount will be taken on the basis of the advantages gained or the benefit obtained by the two entities. Thereafter, now entries are passed in the books of two parties exactly in the way which has been pointed out for ordinary bills. There is no special difference as regards the entries to be made. The only additional entry to be passed is for sending the remittance for one party to the other party and also debiting the other party with the shared amount of discount. So in this case, the one additional entry that is to be passed is for sending the remittance, because the remittance has to be transferred from the drawer to the drawee, or from the drawee to the drawer, from one party to the other party, and another entry would be the debiting of the other party by the shared amount of the discount, because the two parties will share the amount of the discount based on the proceeds remitted as well as based on the benefit obtained on the first bill. Now let's go to illustration 8. In respect of accommodation bills, and here we are seeing that on 1st of July 2016, George drew a bill for 1,80,000, or rather Gorge drew a bill for 1,80,000 rupees for 3 months on Harry for mutual accommodation. So this bill is not issued to make any payment as such, or in respect of any purchase that is made, but it is only a mutual accommodation. To raise the finance. Now Harry accepted this bill of 1,80,000 rupees. Now George had purchased goods worth 1,81,000 rupees from Jack on the same date. Now George had drawn a bill of 1,80,000 rupees on Harry, and Harry had accepted that bill and sent it back to George. But George had also purchased goods worth 1,81,000 rupees from Jack on the same date. So George has purchased these goods, so George has to make the payment. So George does is that he endorses Harry's accepted bill for 1,80,000 rupees to Jack, because he has purchased goods from Jack in full and final settlement. So he says that I am going to pay, though I purchased goods worth 1,81,000 rupees, I will pay only 1,80,000 rupees. So that is a full and final payment. And obviously, therefore, he's getting a discount of 1,000 rupees here. Now what happens is that on 1st of September 2016, Jack has purchased goods worth 1,90,000 rupees from Harry. So Jack has purchased goods worth 1,90,000 rupees from Harry, and Jack has endorsed the bill of exchange received from Gorge, because Jack has received the bill of exchange from Gorge, and therefore Jack endorses that bill which was received from Gorge to Harry. Because Jack has purchased goods worth 1,90,000 rupees from Harry, so he has to make the payment of this 1,90,000 rupees. But he has got a bill of exchange from Gorge. Jack has endorsed that bill of exchange which he received from Gorge, because here Gorge had purchased goods worth 1,81,000 rupees from Jack, and therefore Gorge had since he had purchased this 1,81,000 rupees from Jack, goods worth 1,81,000 rupees from Jack. So George has endorsed Harry's acceptance here. George has endorsed Harry's acceptance to Jack in full settlement of the amount. So Harry had accepted the bill here, and that acceptance has been endorsed to Jack, who is the seller, to George. So George has actually purchased this amount, 1,81,000 rupees. Therefore, he endorses a bill accepted by Harry, and he gives it to Jack in full and final settlement. Now, on 1st of September 2016, Jack purchases. Earlier, Jack had sold to George. Now, Jack had purchased goods worth 1,90,000 rupees from Harry. Harry is the guy to whom George had drawn a bill for mutual accommodation. So Jack purchased goods worth 1,90,000 rupees from Harry, and Jack endorsed the bill of exchange received from George to Harry and paid 9,000 rupees in full settlement of the amount due to Harry. Now on 1st of October 2016, because here it was 1st of July 2016, on 1st of September this has happened, and now on 1st of October, Harry has purchased goods worth 2 lakh rupees from George. So Harry has purchased the good. Now Harry has to make the payment. So Harry paid the amount due to George by check, and we have to give the necessary journal entries in the books of Harry and George. So let us see first of all what is happening with Harry. Now Harry accepts a bill which is drawn by George on the accommodation bill basis. George draws a bill as mentioned here in the question. George draws a bill of 1,80,000 on 1st of July and for 3 months, and Harry accepts it. Now once Harry has accepted this bill, in the books of Harry, we will write it is a bills payable. So two bills payable account, the bills payable account credit, and George's account is being debited for 1,80,000 rupees. Now Harry makes a sale to Jack because Jack makes a purchase from Harry. So therefore, Jack's account will be debited for 1,90,000 rupees, and sales account would be credited because there is a credit sale being made of 1,90,000 rupees by Harry to Jack. Now what is happening is that there was a sale here. So Jack's account has been debited. So Jack has to make the payment because Jack's account has been debited for sales, and sales account has been credited. So Jack has to make the payment. What we do is therefore that we credit Jack's account and we debit bank account because 9,000 has been received against this. Acceptance of the bill has also been received for 1,80,000 rupees. Acceptance received from Jack's endorsement of the bill received from George. Now George had here, let us see the question. George had drawn a bill. Now then it was accepted by Harry. George had purchased goods worth 1,81,000 rupees from Jack, and George had endorsed the Harry's acceptance to Jack. So Harry's acceptance has been received, and here he has endorsed that acceptance to Jack in full and final settlement. Therefore, this full and final settlement means 1,81,000 rupees but by the endorsement he will get only 1,80,000 rupees, so 1,000 will be the discount. So that is why discount is 1,000. Now 9,000 has been received in the bank as a full and final settlement, and thereafter what happens is that now Harry's acceptance is received from Jack's endorsement, which is cancelled. So let us see here what is happening is that Gorge has endorsed the Harry's acceptance to Jack. So Jack has sold some items to Gorge, and therefore Gorge had to make the payment to Jack for 1,81,000 rupees. Now instead of making the payment, what Gorge does is that he has a bill which he makes a payment with, and therefore there is a full and final settlement, 1 lakh rupees the discount. But then Jack purchases goods worth 1,90,000 rupees from Harry. So therefore now Harry has become a seller, and Harry's acceptance has been given to Jack. Because God has endorsed Harry's acceptance to Jack, and Jack has that acceptance with him of Harry, so that Jack can go to Harry and collect the amount. But in between, Jack purchases goods worth 1,90,000 rupees from Harry. So, but however, so he has to make the payment of 1,90,000 rupees to Harry. But Jack has got Harry's acceptance, so he can collect from Harry 1,80,000 rupees. Now he has that right to collect 1,80,000 rupees. So while purchasing goods, he will use up that bill or that acceptance for 1,80,000 rupees, and for 10,000 rupees Jack has endorsed the bill of exchange which was received from Gorge, because Jack had received this bill and he has given it to Harry now. So he has given it to Harry and paid 9,000 in full settlement. So therefore 1,000 is again the discount, because 1,80,000 has been given in form of the bill here, and 9,000 has been paid in bank, and 1,000 is the final settlement or the discount. Now let us see the entry over here, because this Jack has purchased goods worth 1,90,000 rupees. Now here is this Jack's account has been credited, as Jack has sold certain goods to Harry here, and therefore now payment has to be made. So he makes the payment of, because 9,000 he makes payment here, 1,000 discount, rest 1,80,000 rupees he meets with the help of the bills receivable. So bills payable is debited and bills receivable is credited. Now thereafter, Harry makes a purchase from Gorge, so of 2 lakh rupees, and Harry has to therefore make the payment of 2 lakh rupees. So he had just 1,80,000 rupees from the accommodation which was extended initially to him. That accommodation was originally extended to him, and out of that accommodation, because he had to pay 2 lakh, so he pays 2 lakh 20,000 only, and 1,80,000 rupees is adjusted for the accommodation which was extended to him. As you can see here, the George had drawn a bill of 1,80,000 rupees on the accommodation basis to Harry, and in the end what is happening is that Harry is making a purchase from George, so that bill will be used to make this payment of 1,80,000 rupees, and 20,000 rupees separately paid into the bank account. Now, let us see the books of Gorge, what is happening in the books of Gorge. As far as books of Gorge is concerned, Gorge purchases goods from Jack, as mentioned here, that Gorge has purchased goods from Jack for 1,81,000 rupees. So therefore, if we are writing books of Gorge, then we'll have to enter this purchase over there. 1,81,000 rupees, and thereafter the bill receivable account is debited because he receives a bill acceptance by Harry of the bill. Harry accepts the bill which was drawn on him. So the account gets squared up. Now thereafter, Harry's bill is endorsed to Jack. By whom? By Gorge. So Gorge endorses Harry's bill, which is received from Harry, and it is endorsed to Jack. So Jack's account gets debited and the bill receivable account is again credited, and there is a rebate here of 1,000 rupees because this is a full and final settlement. Thereafter, Gorge has made a sale of 2 lakh rupees to Harry, and then we have a amount being received from George of 20,000 rupees after adjusting the 1,80,000 rupees for the accommodation that was extended by him. Now let us go to illustration 9. Now in illustration 9, what is happening is that in respect of mutual accommodation of X and Y on 1st of April 2016, per mutual accommodation, X draws a 4 months bill on Y. So X draws a 4 months bill on Y for 4,000 rupees. Now Y returned the bill after acceptance of the same date, which was 1st of April. Now X goes and discounts this bill from his bankers at 6% per annum. And when he discounts the bill of 4,000 rupees, after deducting the 6% amount on the per annum basis for the period of 4 months, the remaining amount, out of the remaining amount, he will remit 50% of the proceeds that he will get from the bank to Y. Now when due date arrives, the bank will go to X the bank will go to Y to collect the payment, but however X is unable to send the amount due to Y to be able to make the payment, and therefore Y will draw a bill for 7,000 rupees, which is accepted by X, and then Y discounts this 7,000 rupees bill for rupees 6,600, and out of this 6,600 he sends 1,300 rupees to X, and he sends 1,300 to X, So he has got 6,600 rupees. He sends 1300 to X. Now he has 5,300 rupees remaining with him. But before the bill is due for payment, X becomes insolvent, and 25 paisa in a rupee is received from his estate. So we have to record the journal entries in this case in the books of X. So therefore, first thing is that in case of the first accommodation bill, X will debit the bill receivable account for 4,000 rupees and credit Y's account because Y has accepted that bill. X has drawn a 4 months bill on Y and Y has accepted the bill. So now second entry is that X goes to the bank and discounts the bill. And when he goes to the bank and discounts the bill at 6% per annum, so 6% is divided by for 4 months, so by 3, so 2% will take. So 2% of the a 2% amount will be taken in this case. So 1% is 40 rupees and 2% is 80 rupees, so 80% is the discount. And bill receivable account is thereby credited because the bill has been discounted and money is received from the bank, 3,920 in the bank account of X. And discount has been debited here, 80 rupees at the rate of 6% per annum. Now what happens is that he remits 50% of the proceeds to Y, whatever he gets after discounting of the bill are the proceeds. So let us say that he is getting this 3,920 rupees. So half of it is, we can say, 1,960. So he sends 1,960 as the proceeds, and therefore he sends it to X. He sends it to he sends the proceeds, half of the proceeds to Y, and therefore Y's account is debited by 2,000 rupees, and there is a cash credit because this amount is being paid 1,960 and discount is shared by both of them. So discount account is also credited by 40 rupees here, because earlier he had borne the entire discount amount and now for 40, half of the discount is being shared here. Now we'll go further from here, because on due date X is not able to send the amount due. He was supposed to send the amount which was due for payment, which was 4,000 rupees was due for payment, and out of that 50% has to be borne by X. So he should have sent 2,000 rupees, but he is not able to send it, and therefore Y draws a bill for 7,000 rupees, which is accepted by X. So we'll say Y account debit and bills payable account in the books of X, because this is a bill which is accepted by X. So therefore it is a bills payable for him. He accepts a bill payable of 7,000 rupees. Now thereafter, once he writes this bill, he goes to the bank and discounts it. How does he go to the bank and discounts it? After having received the bill from X, Y discounts this bill for 6,600 rupees. So this 7,000 bill, which is accepted by X, is now discounted by Y. So when Y is going to the bank and discounting this bill for 6,600 rupees, he is getting the 6,000 rupees, 6,600 rupees, but for discounting this bill, we will not make any entry in books of X because this discounting is being made by Y. So after discounting the bill, Y will get 6,600 rupees, and out of that 6,600, he sends 1,300 to X. So here, this 1,300 is being sent to X, and the discount is being shared. So the sharing ratio is calculated here because he's bearing 2,000 and he's bearing 1,300. So 2,000 plus 1,300 upon 6,600 of the 400. That is the ratio so of the discount that is being borne by X. 2,000 in the first case, 1,300 in the second case, out of the 6,600 total. So therefore, he gets a discount. He debits his discount account by 200 rupees, and he debits his bank account by 1,300 rupees because he has received this amount 1,300 rupees, and he has borne the discount of 200 rupees. So total 1,500 rupees will be credited to Y. Now the bill gets dishonored. So if the bill gets dishonored, the reverse entry has to be made, and the bills payable account in the books of X is now debited because earlier it was credited, and Y's account is once again credited. This is a reverse entry on dishonor, and thereafter we have said that amount paid, that is 25 paisa in a rupee, and balance credited to deficiency account as being unable to pay. So 25% of the amount is paid out of the 3,500, which is half of 7,000, because out of the entire accommodation amount of 7,000 rupees, half liability is of X and half the liability is for Y. Therefore, Y's account will be debited for 3,500 rupees, and bank account, in the bank account, payment is made from the bank account 875, and 2625 is put in the deficiency account because X is unable to pay this amount. In Y's books, it will be treated as a bad debt, this 2625 rupees. So that is how it is in the case of accommodation bills entry. Now let us see illustration 10. Now in illustration 10, Anil draws a bill for rupees 9,000 on Sanjay. We are dealing with accommodation entry, so first we have to very clearly understand the entire question. Anil draws a bill for 9,000 rupees. Let us go on seeing simultaneously the entries also. Now we have to draw the journal entries in the books of Anil. So in the books of Anil, what is happening is Anil has drawn a bill. So therefore, which is accepted on Sanjay, Anil has drawn a bill on Sanjay and Sanjay has accepted it. So Sanjay's account would be credited for 9,000 rupees and bill receivable account in the books of Anil will be debited for 9,000 rupees. Now, Anil gets the bill discounted with the bank for 8,820. So Anil gets 8,820 in his bank account and 180 rupees is the discount which is charged by the bank, and thereby this 9,000 bill receivable account credit is introduced because it is the reverse of this debit over here. So it is no longer a bill receivable because now money has been received against it by discounting it. Now what happens is that Anil has got 8,820 rupees. Initially Anil had drawn this bill and sent it to Sanjay. Sanjay had signed this bill, accepted it, sent it back to Anil. Anil shows this bill to the bank and gets 8,820 rupees from the bank. And out of the 820 rupees that he gets from the bank, he remits 1/3 amount to Sanjay. So 1/3 of 8,820 have to be remitted to Sanjay. Now that will come to 2,940. So 60 rupees is treated here as a discount because discount is also shared in the same proportion. So we can say that the bill of total 9,000 was discounted, and out of this 9,000 rupees, 180 has been debited to discount because that is a discount paid, and 8,820 rupees has been received. So here we can say the same thing, that 1/3 is sending to Sanjay. So out of 9,000 he's sending 3,000 to Sanjay. So in fact he's debiting Sanjay's account by 3,000, but actually sending only 2,940 in his bank account and 60 rupees the discount. So thereafter what is happening is the due date arrives, and now on the due date Anil has to remit the amount to Sanjay, because unless and until Anil remits the amount to Sanjay, Sanjay will not be able to meet the bill. So on the due date Anil fails to remit the amount which was due to be paid to the bank, because the bill was discounted with the bank for 9,000 rupees, but he accepts a bill of 12,600 rupees for 3 months from Sanjay, because a higher amount of bill. So Sanjay makes a bill of 12,600 rupees and he sends it to Sanjay, and Sanjay accepts this bill. So Anil sends this bill. Anil has failed to remit the amount, so Anil has accepted a bill of 12,000 rupees from Sanjay, and Sanjay has discounted it for 12,300 rupees instead of 12,600 rupees, thereby earning paying the charges of 270 rupees, which is 12,600 minus 12,330. And out of the 12,330 rupees which Sanjay gets from the bank, he remits 2,220 to Anil. And why does he remits 2,220 to Anil? Because Anil has to make the payment against the earlier discounted bill. So before the maturity of the renewal bill, now Anil becomes insolvent, and only 50% was realized from his estate on 15th October 2016. So let us see, that's the next entry. We are seeing that in the books of Anil, Anil has accepted a bill of 12,000 rupees, 12,600 rupees. So this is a bills payable, and he debits Sanjay's account because Sanjay has made out this bill. He has drawn this bill. Sanjay's account is therefore debited by 12,600. Now thereafter, Anil has accepted this bill from Sanjay. Now Sanjay goes and discounts this bill. When Sanjay goes and discounts this bill, that has got nothing to do with Anil's books. So that entry would not be there. So, but what is happening is that Sanjay discounts it for 12,330, and after discounting, Sanjay remits 2,020 to Anil. So 2,220 is coming here in the bank account to Anil, and of course, out of that amount, we'll take 2/3 of the discount in Anil's books. So 270 into 2/3 is 180, and so that much he will also bear out of the discount. And Sanjay's account will be credited with 2,400 rupees. So in essence, his account is being squared up for 2,400 rupees, and thereafter on the due date, the bill gets dishonored. The bill gets dishonored, so we have once again raised the credit into Sanjay's account because earlier his account was debited. We raise the credit in his account and debit the bills payable account again. That is the reverse entry of 8 July. So thereafter, now Sanjay's account is being debited here for 8,400 rupees, and payment of 4,200 rupees made from the bank, and 4,000 rupees he cannot pay. It cannot be borne from his estate. So he can pay only 4,200 rupees because Anil has gone insolvent. So that's how this entry has come. And finally, because Anil has become insolvent, these are the books of Anil. Anil has become insolvent, and 50% of the amount was realized from his estate on 15th of October. So that is how the entries are being made here. Now we go to bills of collection. So let us complete this bills of collection also. Whenever a person receives a bill of exchange, either he decides to retain the bill till the maturity, but in order to ensure safety, he may send it to bank with instruction that the bill should be retained till maturity. So he does not retain it with him, he sends it to the bank, and bank will be collecting the money. And he has given instruction to his bank to realize the payment against that bill on the due date. Now, here the bill is not being discounted with the bank. It does not mean discounted because bank will not credit the client until the amount is actually realized. The bank will go to the acceptor of the bill and realize the amount, and once they realize the amount against the bill, they will then credit the client with the amount which is realized. Now, if the bill is sent to the bank with instructions, it is known as a bill sent for collection. So entries in this case will be like this, that we credit the bills receivable account which we had debited earlier, and we debit instead the bills for collection amount. So we are transferring the funds from bills receivable account to bills for collection account, because those bills have been sent to the bank for collection on due date. And when the amount is realized by the bank account will be debited and bills for collection account will get credited to that extent. And if the amount is not honored, then we will debit the party who had given us the bill and will credit the bills for collection account because we had debited the bills for collection account earlier. So fresh credit is raised in the bill in the account of the party as a debit amount. Now, bills receivable and bills payable books are journals. They are called journals or they are called day books, in which in a chronological order, the details of the bills which were receivable or payable are being recorded. When large number of bill transactions take place in an organization, it becomes convenient to maintain these books, bills payable books, because there are a lot of entries. Wherein any bill transaction takes place, the same will be entered in the day book, first of all, in the first instance, and thereafter posting will be done to individual debtors or creditors accounts from the day book. Also, the totals of the bill which were received or accepted are posted periodically to the bills receivable account and the bills payable account. So this is a posting being done from the journal. Now, bills receivable book and bills payable book are very useful books for following up the status of the outstanding bills. So if we want to at any time want to find out that what is the status of the outstanding bills, what we'll do is that we'll just look at our bills receivable book and the bills payable book for it. And when there are large number of bills and these bills fall due on different dates, now some of these bills may not get honored on maturity due to various reasons, and it's possible from these day books that we can trace the details of those outstanding bills and also identify the reasons for not honoring the bills. So therefore, we have the forms of the day book for both bills receivable and bills payable. So this is the form of the day book. This is the bill receivable day book, bills payable day book, and it is going into folio number such and such for the in the ledger. So bills receivable contains the date of receipt, the voucher number, the party from whom received, and the name of the acceptor, details of the acceptor, the date of the bill, the due date of payment, the place of payment, the amount, the ledger folio in which it will get transferred, this entry, and the mode of the disposal also. So in that sense, bills receivable and bills payable have got certain columns which are necessary. In case of bills payable, the date, the drawer details, the pay details, because sometimes because the pay drawer is different from the pay, the date of the bill, the due date, the place of the payment, the amount, ledger folio, and the mode of the disposal. So that is how bills receivable book and bills payable books are maintained. And therefore, we have reached the end of this chapter. So kindly revise this chapter and try to do these questions also. We are already including these questions in the multiple choice test that will surely give you very soon. Therefore, I am not covering them here. Try to use them for your revision, because these questions will definitely be asked, maybe with a few variations here and there. And so with that, we come to the end of this particular topic, and we will cover the next topic in our morning lecture tomorrow morning. So with that, thank you very much for having attended this session, and do attend our session tomorrow morning with a new topic in bookkeeping and accountancy.